Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. Just before I start today's video, anyone who's interested in receiving my trading signals, then please scan this QR code on your screen where you can sign up for a very small joining fee of $29.99. But let's start here by looking at the S&P 500. We're trading just below 4,000. Now 4,000 is a very significant area due to the fact it offers a very large area of support. It's where that 0.38 fib area is, and just as well as that, we also have the 50 and the 200-day EMA, which has recently formed that bullish crossover. Now, this is a major area of support. If this was to be broken, then I feel like the next area of support is 3,945. If we broke below 3,945, I would be concerned, and that could potentially spark some more downwards pressure down to maybe 3,800. The good news is that I do not expect this to continue much further. I feel like this is just a correction phase, and that we will resume the uptrend that we've been trading in since those swing lows back in 2022 in October. With that being the case, I am looking for at some point this week for us to show a sign of bottoming and for us to continue our movement back up towards last week's swing highs up around 4,150. And I feel like we could even break above those swing highs and go and test 4,200. There's been a lot of noise in the markets as of recent with regards to interest rates. You know, are we going to get a 0.25 basis point hike in March, or are we going to get a 0.5 basis point hike? You know, there's lots of questions being thrown around right now, but all it really takes, guys, is some positive data. If we have the littlest bit of positive economic data, I feel like that's what will then shift investor sentiment from 0.5 basis points in March back to 0.25 basis points, and then all of a sudden things are, pretty sweet again. So right now, there's lots of over-exaggerations in both directions. When we get some bullish data, then of course the markets are probably overreacting towards the upside, and then vice versa. When we're getting some negative economic data like what we got last week with that PPI reading, we are then over-exaggerating towards the downside. And it's just a matter of time until we find that balance. So, you could argue that in a recent week or so, we have maybe over-exaggerated this move towards the downside. And then as we go into next week, which by the way, from a seasonal perspective is quite bullish, that's when we could potentially give some of these losses back and go and trade back up towards 4,100, maybe 4,150. But I like buying dips here. That strategy still continues to work unless we break below 3,945.